I'm sure you've seen this or felt this from other people that you deal with. Everyone is wealthier, everyone has more money, but no one feels wealthier.
Totally.
It's really weird. I was talking to actually someone from your network just yesterday.
Oh, shit.
He's a developer, great portfolio. You look on the surface and objectively speaking, if you see the net worth statement, you're like, guy's fucking has it down. And then you speak to him and he's like, I don't feel good. I feel like I should be further ahead after 10 years. And it would be great if I could just liquidate it all and go somewhere or do something different. And I'm just like,
wow.
So many people are saying that. I've had 3 clients of mine just pick up and move to Florida recently.
Isn't that wild?
It's totally wild.
Because we're seeing it all over the place.
Like my grandparents did it to die. They're doing it to live.
Totally.
Like, it's nuts.
What happened to Florida?
Exactly.
Talk about reinventing yourself. Florida's done a great job reinventing itself.
Oh my God. The sanctimonious, right?
I think that's what it is. I think people are starting to wake up to this idea that you chase your tail making money, and then after 10 years in this example, you realize, holy shit, like I'm not getting any further ahead because the inflation is just ripping so hard. It doesn't matter what they're reporting to us as CPI. That's all fucking bullshit. That the debasement is so strong that no one's really getting ahead. And then when you start to internalize that, you get this angst or this little bit of anxiety that like, what am I doing? What's the purpose of anything? Like, why am I getting up in the morning? Like, nothing is, I'm exchanging my time and labor for money.
It's an existential, you have this existential crisis.
And some people cannot verbalize it, but you can feel it. Everything becomes a little bit meaningless.
100%.
And I think that's just out there in the ethos now. And I think the millennials get it to a much bigger extent than the Gen X. What am I, Gen X?
Yeah. I don't even know what I am anymore.
I think I'm Gen X. I'm not a boomer, I'm Gen X. But I think Gen X kind of doesn't see it as much. Boomers definitely don't see it because they're asset rich. So yeah, it's out there. So that's why to live life on your terms. And this is why we always talk about the goddamn money system.
I know.
It's not like we want to, but to live life on your terms, it's the base layer. That
was kind of before I did this thing that I'm doing. I don't even know what to call it. This like anti-infinite banking stuff. I definitely felt weird about these products because you would see that they don't look anything like they were supposed to look when these people signed up back in the 60s, 70s, and 80s. And you also are managing money for a short period of time. And you realize that after, 5 or 6 years, like the market, the index did really well, but a lot of your clients that you just put in balanced portfolios. And I wasn't an active investor. It was just kind of set it and forget it, which I don't do anymore because I'm not active enough in it. And you can't be everything to everybody. They wouldn't get far enough ahead. And exactly. The missing link for me was kind of opening up my eyes and opening myself up to the world of Bitcoin. And it's not the world of Bitcoin in the context of Bitcoin. It's in the context of what's happening to our money, specifically learning about inflation in the index and how it's kind of made up. They change the percentage of things every couple of years and they take things in and out of the basket. Like when you go to the doctor and you have diabetes, the doctor doesn't say, we're just not going to factor in your weight, or we're just not going to factor in your waist measurements because that'll make you seem unhealthier. So we're just going to pull out that measurement and look, you're fine. Good. Exactly. And I feel like that's what we're doing with the index. They're trying to take things, they're trying to manipulate it so people feel like inflation's coming back down and the index is coming back down. But even if inflation comes back down, it doesn't mean prices are any lower. It just means the speed at which they're increasing is slowing down. Like the whole thing. And I think that's why sometimes I sit here and I'm like, I'm just going to flip this fucking table. It's all just ridiculous. Let's just go to the beach. I know. Let's all just go to the beach. Oh man. Sometimes I'm like, I'm just going to sell everything. I'll move to Thunder Bay and just put all my money into private mortgages and fuck off, Yeah.
Okay. I'm going to ask you about real estate in a second and private mortgage stuff. But I just think that I've never, and it could be my age, but this summer I was talking to 20-year-olds, 30-year-olds, 40-year-olds, a 72-year-old, all having the same thought of where do we move? What do we do? I've never seen so many different age groups talk about the exact same thing. Like, what's going on if we were to leave Canada? Where would we go? And nobody has the answer. That's what like most people have concluded.
All I've heard is Florida. I don't want to do it. That's all I've heard.
Most people conclude Florida, and many of them, it's not their first choice. They've just looked around at the rest of the world and like kind of crossed it all off. And the only one, it's kind of like the least worst choice is Florida.
Yeah, until your condo fucking collapses, you know? That's not funny, right?
No.
But
none of what we're talking about is funny from the
no,
beginning.
it's not. And like you can't go to California because it's basically Canada.
It seems that way. Friends that I had in the software industry have all moved out of there because of the tax. I forget what they were telling me. They were going to have to pay an exit tax or something if they didn't leave soon enough, and the taxes were just getting crazy.
Didn't it take like Bill Maher 5 years to put like a solar panel on his shed or something?
Really? I remember going through San Francisco years ago. I'm talking like 20 years ago. And then the amount of drug addicts on some of the city blocks there was bad. Aiden, my son, just had a friend who was in San Francisco recently, and he said like, there's still beautiful areas of San Francisco, don't get me wrong, but like the amount of homelessness and tents and drug stuff you see on the streets is just, I guess, increased a lot. So the world is just this weird and wonderful place. But Adam, there's always greatness and opportunity and beautiful things in this world too. So
totally. I think everything's pretty good when you consider how bad things are.
Totally.
I guess, right?
No,
maybe for us, I don't know, like how to really approach that, but.
You got to tell me this story, how you stumbled into Bitcoin before I ask you some insurance questions and we get into some real meaty concepts.
Yeah, meaty.
Right? Yeah,
insurance
exactly.
is great.
It really is. Tell me how you got scammed again.
So
scammed, hacked, what's the right word?
So I was with my brother. This was before we moved. We bought space that we now work out of. But while we were still renting, we had this like little office this size and our desks were next to each other. And he installs what he thought was a Windows update. And clicks on it. The second he clicks on it, both of our computers, they didn't freeze, but you couldn't open any file, any Word file. It was all just encrypted bullshit. It looked like Windings when you'd open the file. But every subfolder on our computer had a note file. And if you clicked on the note file, there was like a web link. And we put that web link into the Google search bar and it opened up a chat box with these fucks. And it's like, we encrypted your computer, send us a Bitcoin and we'll unlock it. And the Bitcoin was $500 at the time, 500 US.
2015, 2016 or
yeah, I think the end of 2016. It went up and then it corrected, right? And I'm like, these are scammers. They're fucking liars. I'm not going to do it. I went online and I found this de-encryption firm in downtown Toronto. They were like, yeah, we may be able to do it, probably not, but give us 20 grand and we'll let you know. That wasn't going to happen.
Holy shit.
So I can't remember. I spoke to, I think it was the guy who helped me with my computers, and he's like, dude, fucking pay him. And I'm like, I can't reinforce this. He's like, just pay it. I'm pretty sure it'll be fine. They want you to tell other people to pay it so they can make money. Just pay it. So I had a friend of mine who was into this stuff at the time. He taught me and my brother how to, create a wallet, buy Bitcoin.
That's wild that you did that back then. That's
send it to their wallet. And
that was pretty cumbersome back then.
I know it was. So they sent us the de-encryption file. A few days later, we run it, go for lunch, come back, try to open up the files, all still locked. I messaged them in the box. I'm like, you pieces of shit, you liars. I knew you were liars. The second I send that, maybe 30 minutes later, they reply back. They're like, oh, sorry, man. We sent you the wrong file. Here's the right one. Ran it. 30 minutes later, everything back to normal. Fuck. And then right after this, my buddy's like, oh, you should get into Bitcoin and try this Ethereum thing. Ethereum was $11 at the time.
And you said, fuck that.
No, I said, let's do it. So we put in some money, but we also got screwed by Quadriga.
Oh, gee.
Right? We lost 30% of my money in Quadriga.
Because that was that exchange that...
It wasn't an exchange. It was just a Ponzi scheme. And the guy died in like Thailand, or quote unquote died. I voted to exhume his body.
Wow.
Did
they exhume his body? There's documentaries on this.
I stopped paying attention to it. The money's gone.
Sure.
The money's it's gone. There was also this thing that I put my money into. It was like before DAO, before it was a thing, I was told to put some money into this DAO token. Went to shit as well. So like looking back, I'm like, fuck, if I would have put in more money, look how much money I'd have. But at the time,
your context wasn't there. Like, how could you safely do that?
Exactly.
Didn't know enough.
All I would do, it was put in money and lose money in terms of this. So like, why would I double down? Right.
Totally. Yeah.
But actually, I I haven't touched it. I'm hodling, as they say. And
now you're a Bitcoiner.
Yeah, I'm a Bitcoiner.
Who knew? You've come a long way, man.
Yeah, but I still have it. Most of it's on a Trezor wallet. And it's done well. I'm actually now I'm starting to put in more just because I actually believe in it. And the adoption is increasing. And why hold cash, so.
Wow, you have to go to a multi-sig soon. You'll get super advanced.
I don't even know what that is.
Multi-sig is like just a safe way to hold your Bitcoin where no one person can move it. So like you have to have two
Is that
signatures.
what Michael Saylor does, I guess?
Oh, I'm absolutely sure. But anyone who starts accumulating some, you start doing that so that there's no single point of failure. You can't move it. Like you need
my brother's a single point of failure, and I have a big insurance policy on it. So only when the fair market value of that is higher than the life insurance I have on him, that's when I'll worry about it.
Yeah, I got it. No, it's just a software solution that
fair enough.
You're going to move your stuff. It's kind of like you're making it like a vault where you have to approve it and your brother has to approve it before any Bitcoin can be moved. So it's just like a nice, safe way to keep it.
Oh, cool.
You'll be going down that path sooner or later.
Fair enough.
Okay. I did not know that was your entry into to Bitcoin. Pretty wild.
Yeah, pretty wild.
And then, so give me the latest on you moved brokerage. Can you tell me where are you at right now?
So
and what are you doing with insurance? Are you still doing life insurance?
Everything's the same. Nothing's changed. So the first time I was here, I was really nervous because it was the first time I've done something like this. And secondly, the people that were around me really discouraged me from doing what I was doing and talking about it in the way I wanted to talk about it. And they were hoping, not when I say they, maybe a few people were hoping that I was going to effectively, is everything okay?
Yeah, just checking.
We're hoping I was going to kind of clear things with them first before I went down this path with the ebook and my messaging, so to speak. So I was really nervous about it. And remember, right afterwards, I was like, take this out and stop.
I forgot.
Obviously, I remember.
Give everyone the high level of the name of your book and what.
Yeah, it's called Fortune or Fiction.
Something about great. Neither of us can remember.
Yeah,
I'm gonna Google it.
Infinite banking. Flawed by design.
I think we took a lot of heat for it too, because I think we got multiple emails of people who wanted to counter you or whatever.
Yeah, I'm happy to talk to them. To this day, I still want to try to do a debate with someone. It'd be great.
So, but get everyone the premise of the book.
Basically, that it's a scam. It's a scam in the context that it's oversold, and I believe that these assets, particularly participating life insurance, will be worth a fraction of what people think they'll be worth in the future because they're not actual investments. They're predictive instruments.
So you took heat for that.
Mm-hmm. And then right after that, this great people at this brokerage, seriously, these people brought me into the business. So we just didn't see eye to eye on this sort of stuff. But they were kind of disappointed in the way I conducted myself, what I was saying. And so the second time I came back, I didn't walk back a lot of the things that I said, but I kind of felt like I had to defend the industry a little bit more, which I did, right? But it's kind of like I felt like I went from one extreme to the other. Mm-hmm. And I had to make some changes with regards to, my own personal business life, just because I didn't feel like...
you were in integrity?
No, it wasn't an integrity thing.
Okay.
I just, the people that brought me into the business, I really looked up to them and as parental figures in a way. And it got to the point that I just felt like the relationship was imbalanced. I kind of wanted to do and talk about what I wanted to talk about in my way without worrying about constantly someone overlooking me.
Possibly offending someone.
Yeah. And and they're not wrong and I'm not right. It's a matter of opinion and preference. Right. So I found a group that just actively does not give a shit about this sort of stuff. Obviously, who do you guys place your business through? Your brokerage, is it?
I don't know.
You are a brokerage though, right?
Yeah, for real estate.
Yeah,
we left and had to start our own for very of the similar.
Okay, so
we were at Keller Williams. Keller Williams went bankrupt.
I still see the signs.
No, sorry, the Oakville chapter that we were in. They've since reopened, by the way.
Okay,
but the Keller Williams went bankrupt. Then we had to quickly go to what was called our discount brokerage. And then Nick and I thought, what are we doing? Let's just open up our own brokerage. So then we started Rockstar Real Estate because we were just being thrown around. Nobody liked us. Nobody believed in real estate investors.
Right.
This is 2007, 2008. It was really looked down upon. So we just left and started Rockstar.
I see. Well, I'm not going to start my own brokerage, but I still have to submit my business through a third party. And as you know, it's different. They're smaller, a little bit more niche. The guys there, I feel like we're on a similar level professionally, and it was just a fresh start for me. You know.
Yeah, no.
It worked out well, but it was tough. It was tough going back. Making a change in life is always.
Oh, the name of your book, by the way, just so you know, Fortune or Fiction: Why the Be Your Own Banker Concept is Flawed.
Right.
fortuneorfiction.ca. Anybody can grab it there.
Thank you. I got to update it. I have a bunch of notes that I want to do to like update it. It's just been too busy.
It's funny, just kind of what you said, it just gave me a flashback. Like, I guess I didn't quite realize how much our paths are similar, because when we started in real estate, the brokerage that we were initially at, that I just mentioned, a few people in there were telling people behind our backs that we were going to fail. And we didn't know. We were just like so busy trying to survive. Like, I had 2 kids at home and Carol was at home. Like, just, I had bills to pay.
Right.
I just didn't even have the time to pay attention. But then a few people that started working with us, because we were really good at lead generation. So we actually needed help. We had more investors to work with than we could physically work with ourselves, myself and my brother. So we took on some people, and they were starting to tell us like, hey, this brokerage, just so you know, like, they're like behind your back, they're saying you're going to fail. And we were the only ones really doing business. And one day Nick and I were in there like 7:30 a.m. and people knocked on the front door, and we unlocked the door and they busted in, they ran to the Xerox machine and they wheeled it out, and they were like, this place is going under. They're not paying their bills. And then we realized, oh my, we had heard whispers that they were kind of struggling. Like the brokerage.
Right. Not
us.
Okay.
Not us. Like the brokerage we were in. I think anyone who's just following their kind of own inner voice or their own path, you ultimately are going to bump into some things that you have to deal with. And you did too.
For me, it was coming across policies that are old, that just don't look like what.
Why? Like, what was it? So they didn't grow to this extent.
Well,
like
we discussed this. The first, participating policy that I took on from 1979 just hasn't been getting dividends since for like 8 years.
And why is that? I guess I've forgotten.
It's all based on predictions and interest rates.
Yeah.
So the idea is that back in the 70s, 80s, and early 90s, interest rates were very high.
Yeah.
So in order for the insurance companies to maintain dividends, they didn't predict that interest rates would drop this low. So every company is a little bit different. And over the last year, I've learned a little bit more about how each company does it. But in general, they're all predictive. So the insurance companies make predictions 20, 30, 40, 50 years out. And most of them are heavily based on what they believe interest rates will be. So as long as interest rates remain in a range that is high-ish, then these blocks or the fund will net enough profit to issue, or surplus, as I say, to issue a dividend. But if interest rates went too low, and these blocks, they may be profitable from an investment management standpoint, but not profitable enough for the insurance company to afford to pay out a dividend. So they don't get a dividend. So I have a box of policies, a few of them, it's rare. Like I only have 2 policies, the same policy from 1978 not getting a dividend. But all the other ones I see, they're getting dividends. They're just getting a fraction of what was illustrated, 20, 30, 40 years ago.
So if whatever you're investing in, they make the wrong predictions, you just have to suffer the results through the life of the policy.
Yeah, totally. And right now, I do know, and this was a Sun Life piece that I read recently, they're predicting interest rates to stay to the 3 to 6% range for the purpose of their predictions.
Okay.
And I know most insurance companies, before maybe I think a year or so, this was right before COVID, it was a Manulife event where the gentleman who was running, I can't say his name because he actually won't let me, was talking about their par fund. And when I talk about in the book, it's a trust me project. You got to know what you're getting yourself into. He was effectively saying that all companies in general are predicting, the long end of the curve to be high, meaning interest rates to stay high or stay at a higher level. For
Even
the
now,
long
that's
run.
what they're predicting.
Even now,
okay.
If you look at Sun Life, 3 to 6, that's pretty high. Yeah. And I'm like, holy crap, like if things go well with regards to the interest rates cutting cycle, where are things going to settle? Maybe at 3, 3.5. And that's if anything doesn't break, right? Imagine if something breaks, then what? Then we go into 0 again?
Or you can keep them high, but just send checks out in the mail. You can get the inflation a different way. You can save people a different way.
Yeah, but people aren't used to that. You've been messaging for years that it needs to be at this number. So you understand that it can be high, sending checks in the mail, but people don't feel that yet. Like Jerome Powell said recently, people need to believe it's going to be 2.5% or 3%.
Was that the verbiage? Okay.
Yeah, that's what he said. They need to
I try to ignore those guys at all costs.
Of course.
Yeah.
But like, at the end of the day, if people just believe that it needs to be this number, if it's not this number, you can send checks out, but people aren't going to be comfortable with it because
Sure. It's such a psychology confidence game.
Exactly. Yeah. So we're just a few fuck ups away from maybe negative territory. We are.
Yeah.
You know.
Yeah.
And like, I don't know what that looks like. I don't really care what that looks like. I can't control it.
Yeah.
Just work and have a good day and try to make a little bit more than you spend.
But someone like you, once you understand these concepts, then you can apply it. Then you kind of get it. To me, it's kind of like you see the Wizard of Oz, and then you can get the right stuff, get the right insurance policy, get the right real estate, get the right Bitcoin, whatever it is for you, get the right stuff that you think is going to match your understanding of the current system.
Well, that's my problem. I don't know what the right is anymore. Like I was involved in the weed market when it went through the roof, and I confused being lucky with being smart.
Sure.
And then I lost my shirt on a bunch of shit. And I was in all these private mortgages, and everyone who was selling me the investments were like, all these mortgages you have are going to go to shit, right? So focus more on this stuff. The irony, the private mortgages have been problematic, but the best thing I've ever done with my money by far.
Why is that?
Safe. I see it, right? Now, the problem with private mortgages is, you can't take on, if you're leveraging to invest, you got to be careful. You got to be able to make enough money to carry your own debt, and you just got to be able to deal with the bullshit.
The bullshit being people stop paying you.
Yeah.
Are you doing residential private mortgages?
Yeah.
And then have people stop paying you on some of them? And so you've taken keys on some.
So I've changed the locks on a couple properties.
So you foreclosed or power.
Yeah, but they were vacant, right? So like and I communicate with these people, right? If they're not happy about it, I'm not happy about it, but like, it is what it is.
A deal is a deal.
Get the lawyers involved. Let's try to deal with this amicably. And I got one on the market, and I could probably get rid of it for a slight loss, but if I don't sell it by the new year, I'll just rent it out. And another one is a cottage that I'm flipping, and I'm hoping that will work out well. It's looking good. And I've bought a couple.
What do you mean a cottage that you're flipping? You took it back and you
just changed the locks. No. Okay. And I'm holding my debt. I didn't close on it. I'm renovating it. As the debt holder.
Okay.
And then I'm going to list it. And sell it. And whatever price that I get, maybe I'll keep it, match it, maybe I won't.
You are the bank now.
Oh my God. Yeah. Ironic, huh?
How ironic.
And then a couple others, 3 others I just bought. And I partnered with a family member a year ago.
Okay, so you were just saying that before we started recording. So you decided real estate's something that you want to have some allotment to.
I just liked, when I bought my house and I had a line of credit, I sold an insurance policy to a mortgage broker. And I can't remember how we got on the topic, but he called me. He's like, hey, I have these builders in Kleinberg. They need like $140,000 tomorrow because they fucked up the kitchen and they have to rip it out and redo it. And they need to list the house in like March, and it's December 1st. And he's like, you should give him the money. I'm like, I don't have the money. He's like, yeah, but you mentioned you have a line of credit. And at the time, I think I was borrowing at like just over 4%, and he was giving me 15% and like 2% up front on $140,000, right? So I gave him the money. I was in third position, but there was a lot of equity behind me. And I knew the person in second position. She was another client of mine through this individual. So I spoke to her, and she's like, if things go bad, we can approach our position together. Don't worry. And I got the money, worked out really well. I got the money out of that deal. I got 3-month penalty when I got the money out of that deal. And I was waiting for him to send me another deal. Do you mind
me asking what the rate was that you looked it on?
15.5%.
15.5%. Yeah. And how much equity was in there that made you feel comfortable?
The first mortgage was 9. The second mortgage was 3, and I was for 150, and the current value was around $2 million. So there was a lot of equity there.
Okay.
Enough.
Yeah.
Listen, it worked, right?
Yep.
And I got 3-month penalty when I got the money out. And I'm like, wow, this is freaking sweet.
The borrower probably paid any legal fees.
They
paid for all the fees.
They pay for everything. Yep. And when I got the money out, I was waiting for him to send me another deal, and it didn't come. And I was just like, hold on a second, I should call up mortgage brokers. And
you had that light bulb moment.
Yeah, I was like, let me just call up mortgage brokers. And
kind of unadvertised that a lot of mortgage brokers are doing that, and lawyers and real estate lawyers.
Yeah, everyone does it. And I started cold calling mortgage brokers. And it was like, and I can cross-sell the life insurance. It kind of like worked out not the most compliant, right? But like, nonetheless, cross-sell some life insurance there too. And over the last few years, I've built up a really small network of really good guys. And I have, a bunch of deals on the books, and it's a nice little side gig. And through that, I always felt like if I did this long enough, something would break. Like it was just, I knew it was bound to happen. Like my grandfather did this years ago. There's some guys that I lend with who are in their 90s who've just seen it all.
Sure.
And I knew at some point in time I'd have to be ready to,
like, to take keys back and take ownership of a property.
Yeah, exactly.
Yeah.
And
that's the risk and reward.
Yeah, totally. But it's nice. I have my goal is now is to kind of build up a small portfolio. And I don't think I got deals on these properties, but for 3 of them, I was able to get them cash flow neutral before I closed. And that's the beauty of this.
How did you do that?
I'm not closing until I want to close. So I find it. So I control the deal. I control the debt.
Well, what do you mean? So you're not closing because you're just leaving it?
So there was one house.
Name?
Yeah. So there was a house. We were getting offers. We had an offer, but they couldn't close and they walked away from the deal. So I relisted it and we were getting more offers in and around that purchase price. And I said, hold on a second. Let's just take it off the market and list it for lease. So listed it for lease. Whatever the lease rate I got, I'll just deduct, 15% for TMI, and whatever that gets me in a mortgage, I'll just go get that mortgage and close on it. And it just so happened I was able to match the best offer that they couldn't close on. Yeah. And the money that I had the down payment was 20% and it's cash flowing $400 a month. Like, when the hell does that happen?
Mm-hmm.
Like that.
Right now.
Exactly. And the mortgages that I got, I took back more money. So I put, 80 grand down, but I got my 150,000 in a mortgage back that wasn't paying for a year. So it's just a no-brainer. And they're good people. They're renting. It's going.
Yeah, good for you. Wow.
It's cool, actually. It has a garage that I'm going to convert into an accessory dwelling unit. And
you're going all in on.
I don't know about all in, but it's low-hanging fruit.
I guess in my mind, you're the insurance guy, and we talk about all this insurance stuff. And now you're like, hey, I'm doing privates, I'm doing accessory. Have you heard of ADUs? Yeah. I'm going to be doing an accessory dwelling
I didn't even know the acronym.
Yeah.
But the way I see it, like, I can build out this unit for $200 and it services $400 at current rates. Like, it's an absolute no-brainer.
Yeah, we have some clients in Kitchener that are building. They have a legal duplex and they're dropping in. It's actually a contractor who's also a member of Rockstar putting in the garden suites in the back.
Yeah,
and they're just killing it. Because there's an extra, like some of them are getting like $2,000 extra on a house that existed. You're not changing the lot. You do have to invest the capital to build that out. Mm-hmm. But $2,000 a month isn't like peanuts either, right?
See, it's free money. I put in $200, I get the benefit of $4.
Yeah. I never heard it described like that.
But that's the way the numbers go. Yeah. I already got it pre-qualified through the bank and whatnot. I have a good partner. And
banks are getting a little bit better at refinancing properties now that have accessory dwelling units on them. So yeah, good for you.
Well, I was lucky. A few years ago, I do private lending with my uncle. And he's always been like, let's buy something. Why aren't we buying something? And I'm like, I don't want to go on MLS. I don't want to deal with anyone, but like, just wait. I always felt like there'd be an opportunity. Exactly. And then next thing you know, things start blowing up and, call Harold up. And we opened up a corporation actually. And, we have a couple deals running through it now, and it's great. It's just kind of running itself, you know?
Yeah. Good for you, man. You know what? There's something interesting about you. You're just not afraid to get into new things.
But it's hurt me before, though. It hurts. It has hurt me. Like, I've had a lot of wins, but I've had a lot of losses as well. I'm kind of learning how to be a little bit more careful. Mm-hmm. I think I feel now, though, with the real estate stuff, like, to me, I realized I was doing stuff without an information advantage. So like, I remember in the early 2000s, some friends were telling me, hey, buy this mining company in Alberta. Don't even get me started with that shit. Oh my God.
It was like, I'll never forget, like, I had like $3,000 to my name.
Oh, this company, it's like CBD 14 direct to your asshole, right? And it's like this new weed technology, and it's only $100 million valuation. Only $100 million.
You're going to buy it for 14 cents. You got to call this guy. It's like over the counter. I didn't understand what any of this stuff meant. And every time I bought something that was supposed to go from 14 cents to like 80 cents, it would go from 14 cents to 0 cents by next Tuesday. So, and I did this like 2 or 3 times, and I slowly started to realize I don't have an information advantage. And one thing I liked about real estate, I thought was, wow, there's no board of directors. Like at Apple, I don't understand what they're going to be doing next year because I'm not sitting there with the board of directors. I don't know what's going through the CEO's mind. But with this real estate thing, if I could kind of sort of try to understand the Bank of Canada, which was like my biggest risk point, I can kind of see on the streets what vacancy rates are, what demand is. I can kind of get an information advantage so that when I invest, the variables I can kind of like control to the best of my ability outside of interest rates.
See, I do it even dumber than that, because if I have these properties that like I own, the debt that I control is free and clear. All I care about, I don't care about what vacancy rates are. I don't care about what rents are. I just care about what I can rent it for. So you list it for rent, someone offers you rent, and then you were like, okay, how much can this service?
Sure. Yeah. And I guess we're saying the same thing. I was curious of like what the rent would be. And is there like 10% of the street vacant? Yeah. Like if there's 10% of the street that's vacant, I'm like, holy shit, will I get any rent? If vacancy's low, then I'm almost guaranteed some amount of rent. Then I can do the analysis that you're talking about. Right. And I'll never forget when I was driving down one student rental street by McMaster really early on, I had paid for a mentor and, other money I'd spent, it was either 3,000 or 8,000. I don't know. My wife let me do this thing. She's an amazing lady.
By the way, do you ever do this? Any small amount of money you spent ages ago, you're like, what if I put that in Bitcoin? Like,
oh yeah, no, I don't. For some reason, I don't want to.
I know.
But I do misrepresent to myself how some amounts of money are. For example, there's a guy that I think in the rock star kind of community that I lent, I thought, an astronomical amount of money to. Like I thought, this is like the biggest thing I'm ever going to do. And we found the old checking book that, where you write down, I don't know if you've ever done, I think you're too young for this. You write down like your check number and like who you made the check payable.
I still write checks, but I scan it in. But I know what you're talking about. The paper, book, the piece of paper, right.
And I found the book.
Oh, man.
And it was, at the time, he was a friend of a friend. And I was convinced it was like $25,000 I had lent him, because that's like, it felt at the time. And I found the checkbook and it was $2,500. And I wrote in there like, to be paid back plus interest. Like I'd made a big deal of writing this in, and it was check number 1 on this like new book of checks, I guess. So looking back, you just kind of realize, wow, that was like $2,500 spent. Not that that's not a lot of money now, but the context is very different. Like at the time, it felt like $2 million to me. Like I couldn't believe we were doing this. We were lending this money out. I didn't have a lot of free cash. But anyway, I got sidetracked there. I wanted information advantage on stuff. The mining companies in the early 2000s, I never did. It's part of the reason I feel so good with some of the real estate decisions we make, because I'm like, I understand how this debt works. I understand our interest rates. I understand the vacancies. It's why I didn't invest in Bitcoin early on, because I didn't feel like I had an information advantage. I'm like, I don't understand this thing.
There's a video, I think, of Milton Friedman talking about a decentralized currency in an interview in like the late 70s.
I've seen it. And Henry Ford talked about an energy-backed currency as a way to like stop world wars way back. So like,
I don't know if that's going to happen, but
well, no, us humans are pretty good at like really finding reasons to hate each other. But very tribal in that way.
Oh my God.
But okay, so you went down the real estate front. Is super cool.
But I've always dabbled in it. It's a pre-construction condo. My office bought that pre-construction as well. So I've always wanted to get into it.
Okay. So that now with that understanding, do you talk to people differently about the insurance policies they should get? Because now you are a real estate person. So how do you approach what real estate policy somebody should have with your newfound knowledge? What has changed? Or is it just cemented your ideas, like confirm?
Exactly. Okay. That's what it did. So you guys helped me kind of find that missing piece. So a lot of people talk about buy term, invest the difference. And I as I started to go down this path, I'm like, okay, yeah, people should. I'm like, but why? Like, I know there's going to be more money in the long run, but why? And like, you guys gave me that missing link of, well, no, like inflation is actually a lot worse than the index. Because I would hear a lot of people say, you would speak to investors all the time, or older individuals who have money, and you'd ask about inflation. Everyone would always say, oh, it's actually a lot higher. It's actually a lot higher. Well, the reason why it's a lot higher is because there's more money in the system that we don't talk about. They just talk about the CPI. So that was kind of, you guys provided that missing link. And now it's just kind of cemented these things. Because now instead of telling people you need to beat 2, 5, or 3, I'm like, no, you need to try to beat 8. That's really, you got to beat 8.
Yeah.
And if you're not beating 8,
you're not just staying, you're not even keeping up.
You're getting wealthier, but it's not buying you more shit, so you don't feel wealthier. And this is why you feel behind.
And 8's not easy.
No, it's not easy. In private mortgages, I think it's easy if you're willing to take control and take ownership. And not trust anyone too much. I think it's very easy.
Some people have got, I don't know if you followed the news recently in the mortgage world, but a lot of people got caught up in that and just doing some promissory note stuff where they didn't have collateral behind what they were lending. So they were lending and they were just getting, 12% or whatever they were getting, and there was no actual collateral. The way you're doing it, just to be clear, anyone listening to this, you had collateral should the payment stop.
It's a registered charge. It's a lawyer, right?
Yeah. So you could actually go to the collateral itself,
but that's
and
not
take that property.
That's hard as well. Because the lawyer, I send my own letters. I just call people when there's missed payments. I try to deal with people. Listen, easier said than done, right? A lot of people that I've noticed in this world, they're very quick to engage the broker and engage the lawyer, but it's your problem. You deal with it, and your money's at risk and the owner's money's at risk. Just try to communicate with them. Obviously, it's not always possible. But the idea that someone just puts their hands up and walks away, that's rare, and
it's also rare that you're someone who will deal with that directly. Most people don't want the hassle.
No, but it's my money. And the way I see it, there's opportunity in that. There really is.
Nick, okay, so there's this insurance example that I want to ask you about that I'm going to probably butcher.
No, you didn't. You did a good job.
Okay, so I just want to frame this insurance question. You have $100,000 in a bank account. You're fortunate enough to have that, or in some form of investments or whatever it is. Let's just say $100,000, earning some amount of interest.
Yeah, it's an investment. Let's call it a mutual fund or whatever it is. Doesn't matter.
But then you also have an insurance.
Is it in the bank or is it?
I guess it's in the bank. I forget what Nick said.
Let's assume it's in an investment, like a mutual. It doesn't really matter either way. Yeah.
Okay, $100,000 of something that's compounding its growth, and it's this wonderful thing. But then you also have a life insurance policy that you're able to use to get the same amount of money should you need it, $100,000, because you can use the life insurance policy as some sort of collateral. I don't know the right language, but you can use that life insurance policy to get also access to $100,000. What Nick was asking was, well, in the insurance world, people will say, it's much better to do it through the insurance policy, because if you were to drain the $100,000 investment, you're not getting any more compounding. Whereas if you have the insurance policy, you can, I guess the terminology is you can use it as collateral than to borrow against.
Yeah, it's no different than a line of credit on a piece of real estate.
And so you still have the asset that's growing. So the insurance policy really is a better way to get access to that. And I think he was disagreeing, and I can't remember exactly why. It would have been better if he was here.
So he was disagreeing and you were defending the insurance?
I was defending the insurance because I was thinking, like you're just describing, I'm like, listen, I hate to defend insurance, but in this case, it feels right to me because the insurance policy is still doing what it does. I know it's predictive or whatever, Well,
first of all, it depends what type of policy.
Sure, it does.
Right? So
but it's doing what you didn't lose the asset. You used that insurance policy as collateral to get access to $100,000 that you can then go do as you please. Where if you drain the investment down, you are genuinely losing the opportunity for any compounded growth. So in that scenario, I was defending insurance.
Right. What's interesting though, is that let's say that advisor of yours convince you to do this and say, take this 100 in cash, put it in this policy. Let's go to specifically Duca Financials, the one of those popular banks.
Okay, I've heard of it.
Duca Credit Union. Let's take out a line of credit. Let's assume it's whole life participating life insurance where the full cash value is pretty much that you have is guaranteed. We'll get you a line of credit against 100% of the value. The policy still grows and you have access to that money. That same bank, Duca Financial, if you took that $100,000 and bought a GIC, they would give you a line of credit against 100% of that GIC.
Okay.
If you took $100,000 and put it in a mutual fund, they would give you a line of credit up to 75% of the value in that mutual fund.
Really?
Yeah, man. Go online. Doesn't pay an advisor a thing. If you take that $100,000, go to Duca Financial, you can partner with an advisor that they have on their list. One of them that I met through Design Securities that'll give you a 3-to-1 loan that you can put in the index.
Come on.
Yeah, man. And so this is the same bank.
Sign it over, I guess. They have
an assignment on it. Yeah, they're the first mortgager.
Yeah, wow.
So it's the same thing. So the question is, why are so many people doing the strategy with a life insurance policy? Why?
You guys are good fucking salesmen, man.
Well, or are we just telling you that the only way to do it is with a life insurance?
Yeah, no, I get it.
Right? Listen, when I help someone get a line of credit on their insurance policy, I don't get paid. I refer them to Duca. Now, what's nice is that because you help them, there's other opportunities for business. I met a gentleman through your network, tried to get some business. Actually, I did get some business from him. But when we were just talking about a scenario, he was like, I have this he was in a cash crunch. He has this old whole life insurance policy that had like $150K. And I'm like, dude, let's get you a line of credit against the cash value. And I'll be setting that up for him next week. It took me 2 weeks to get my line of credit through Duca. They are awesome to deal with. Absolutely awesome.
This is the thing that they specialize in? Are there other financial institutions that do this in Canada?
So I have my own life insurance policy owned by my corp that I was overfunding. It's universal life insurance policy. And when the market tanked during COVID, I started putting in before I got a bigger house and took on a bigger mortgage, I was putting like $1,500 a month into it just to buy the index. And it got to like 70 grand recently. I don't have to pay premiums anymore. And I have a friend of mine who manages his own fund. I really like what he's doing. I already have some money in it. So I'm like, okay, I'm going to take out a line of credit against my policy, pay 6.5%, whatever it is. Can't remember the exact interest rate, right off that interest. And I'll throw the $45,000 back into his fund. And now I have money being made in two places. It's growing inside the policy, carrying the interest, a lot better than dollar cost averaging the $200 a month in. And I have twice the amount of money in his fund. And it's great. I can't remember where the hell.
And they do it with equities as well? Because some of them can be so volatile.
Equities, they'll go to 50% with just a credit check, 75% with like a kind of a traditional mortgage app.
Okay.
But if it's equity based, they're not going to give you 100%.
Okay. And I guess they're approving the equities to make sure what the basket of equities is or whatever, if they like them or don't.
Yeah, totally. Oh, that's what I was saying. Do other banks do this? So I needed to send a letter to RBC because I have loans with my dad through RBC through his business that we are both co-signers on. And Duca wanted a no interest letter from RBC, basically saying, hey, we're first on this one, even though Adam signed a personal guarantee, this is effectively ours. And right when I sent that letter to RBC, my banker there said, oh, by the way, we can do this too for you. And I sent them the policy and they were like, oh, our minimum's $250. So it seems like the banks can do this as well, but unless you have cash value in your policy exceeding $250,000, it seems like they don't want to waste their time. Whereas Duca, they'll do it for you. And it's great. Like the reality is if I sell a participating life insurance policy and help people leverage it immediately for $50K a year, on $50,000 premium, I'm probably making here, make my calculator. On a $50,000 cost of insurance.
Annual cost.
So my bonus structure, so $50,000 take 0.5, that's a FYC, 25 grand, times 1.85 is my bonus, 46,000 plus 50%, 25,000. So I would make 71K on that deal.
How's that paid out to you? Like in what increments is that paid out to you?
71K.
Immediately?
Yeah, man.
Come on.
Yeah, man.
Day one.
The second you write the check the next week.
No wonder insurance salespeople love insurance. That's the commission?
That's what I would make. Now,
you just made all real estate agents happy to think their commission's nothing compared to that.
Dude. And so I've spoken with people through your network who sent me what they bought. Oh. And they would be like, oh, the advisor said they only made 50%.
Okay.
And I'd be like, no, they didn't. Their first year commission is 50%, but you're not factoring the bonus. You take 50%, then you add the bonus. Now, it depends on where you submit your business through and how this works. Some guys through, Investors Group, as I've heard, the bonus is very tiny because they give you a salary and a lot of support. Someone like me who's been around for a little while, who doesn't do like crazy amounts of business, but enough, right? And I was able to negotiate a really good bonus. I'm sure there are people with higher bonuses than I do. As far as I know, my MGA makes like I think 200%, and they make that 15-point spread on the 15% on the 50%. But at the end of the day, the reason why these are so popular is because of the commissions. Full stop. I'm sure you've seen on Facebook, participating life insurance to expand your business, or becoming a banker to expand generational wealth transfer. No more RSPs or TFSAs. Better way to do business, and you can leverage, take money out of your corporation tax free. That's another thing. People can buy any type of life insurance, universal life, whole life, with cash value, take out a line of credit on it inside their corporation, but take the money out personally. It's a massive loophole right now. So if you have money stuck in your corporation, a lot of people are saying, let's take a strategy. Well, the strategy is that Duca is giving you a personal line of credit against a corporate asset. Now imagine buying a house in the name of a numbered company and going to the bank. I already spoke about this with my mortgage guy at RBC. I have ABC Co. owns 123 Tom Street.
Yeah.
I want a personal line of credit. And he says, but you don't own it. The corporation does. So we'll give you corporation a line of credit if you qualify, but like, that's how it works. Meanwhile, go to Duca. Corporately owned policy, individually insured. Corporation doesn't have a life, right? And they'll give me a personal line of credit against it.
Wow.
I know. Wow. Right?
I have no idea. I wonder how long that'll exist.
Well, exactly. Now, I've heard from people that there are accounting firms that are effectively like writing letters as part of these big deals and saying, no, it's totally fine right now. There's been a lot of strategies that have had to been wound up. Like a big one is the 10-8 strategy through an insurance company, 10 years ago, right? It died right when I was entering the industry.
Okay.
But basically it was offside with the CRA and they were battling about it, and all these people who had to wind it up. I wouldn't be surprised that sometime over the next few years, the government's going to be like, anyone who has a personal line of credit through a corporately owned strategy, they have to pay it back within the next year, or else we're going to make you pay tax on the withdrawal, and then effectively go to Duca or go to these other financial institutions saying you can only offer lines of credit to the owner of the policy, not necessarily the insured.
Yeah.
So it's a great loophole.
I can't believe I'm saying this to agree with the government. I guess I'm just, seems like that would make sense.
I'm surprised it's happening at the institutional level, though, which just goes to show you that the powers that be really don't know that much more than we do, or the basic person on the street. I had a meeting with one of the regulators in the context of this stuff that I'm doing with regards to participating life insurance. Great woman, smart lady, but she just they don't understand the product enough. And that's the biggest issue, that the banks and the insurance companies, rightfully so, because they have the know-how, are just one step ahead. So the government, that's just constantly like whack-a-mole,
I wonder as things get a little crazier. I know in the U.S., lead up to the U.S. election cycle right now, that Harris is saying that they're proposing like an unrealized a tax on unrealized gains. I don't know if you've seen this.
I have a hard time calculating my actual gains, let alone unrealized gains.
I don't even know. But just that thought is making me think, because I've always said this thing with Nick that we've always laughed at, but I think is going to come true. I'm like, Nick, you don't understand. RRSPs in this country are such a honeypot that when millennials come into power in a main way as politicians, the only people are going to have real substantial RRSPs are going to be like old boomers or maybe some Gen X. In the name of fairness, I can totally see that the tax rates on your withdrawal of RRSPs are not going to be what people anticipate, and that RRSPs are going to be attacked in some way when it comes to taxation. And I know that sounds like I understand that's like blasphemy. What politician would run on that? No one will ever vote for that politician. I can just see it happening, that there's going to be all this RRSP money sitting there. The governments are going to continue to be broke. And in the name of fairness, they're going to say, well, Adam, you know what? You have X number of dollars in gains on this RRSP. The top 10% of it, we're just going to wipe that right off the top. And we're going to take that.
And who controls it? The institution.
And if you've ever tried to get your money out as your RRSP, you have to beg and plead. The government withholds tax at the point of withdrawal. Like when I had to do this to start Rockstar, I withdrew all my RRSPs. And I was in shock that the bank said, well, there's a withholding tax of like this percentage on this dollar amount. And I'm like, no, you don't understand. I'm making no money this year. I need every dollar I can.
They're going to say, well, you tell that to the government, you'll get it
after
back.
And you'll get it back.
Yeah.
But they withhold it at source.
Of course, people think they're getting double taxed, but they're not. Yeah.
No, they're not. Yeah. But it shocked me because I needed that money.
They don't care.
They don't care.
If that happens, and if you're right, insurance policies are touched well before then. The amount of money that is being held in life insurance policies by the institutions is in the hundreds of billions of dollars. Like the participating funds, I think I calculated the biggest. I have an Excel spreadsheet on my computer. It's like Industrial Alliance, Canada Life, Manulife, Equitable Life, and Sun Life on a combined basis have 200 billion in assets under management in these par funds specifically.
Wow.
Right. It's a lot of Canadians' money that ironically they don't really know how they're going to get returns from, which is crazy. But people love it. I was having lunch with a doctor the other day. All he invests in is a little bit of real estate and a whole life insurance. And I'm like, I'm just so over it. Like, okay. I get it a little bit, but it's hard for me. The way I see it is this: if you had a fund manager stand up and pitch participating life insurance as an investment, without mentioning life insurance, just discussing the concept of the dividend scale interest rate on its own, no one would buy it. And because of that, I just resent how it's being operated and have a hard time selling it as an investment.
Okay, so then what's the flip side? Like, who do you speak to where you're like, absolutely, you need this?
Nobody. It's hard for me. You know, it's hard.
What insurance are you selling?
Just term insurance. You know, basic stuff. And the reality is even when people, I feel like, have enough money to justify it, I still look at it and like, just why? Like. There are people who have these big policies and they already have so much money that it's a little bit irrelevant. Now, I do have a few people I'm working with who want to use this strategy and want the life insurance and want to take the money out of the corporation. It's few and far between, but it's there. But generally speaking, I'm just like...
It's not serving you.
No, it's serving them. Buy a big term insurance policy. This whole buy term, invest a difference. I get why people don't like it. And the reason why people don't like it is because a lot of advisors who sell buy term, invest a difference are like, let me invest a difference for you.
Got it.
But like, I don't want to invest a difference for you. I'm not telling you where to invest your money. At a bare minimum, just start with the index, pay 5 basis points in fees with VFV.to, and I guarantee you in 40 years, the amount of money that you have compared to the death benefit on the life insurance is like 4 times the amount. Fine, even if you put it in your RSP and it's taxed at 50%, you're still going to be twice as better off than if you had the life insurance. What insurance companies are doing is they're taking your dollars and giving you back pennies in the future and buying assets with it. So take most of your money and buy assets, unless you are so asset rich and cash rich and you're writing a big check to the government every year that you resent. Unless that's the case, because at least dumping it into insurance policies, that doesn't happen. Fine to do it. But the reality is the people who do that, generally speaking, aren't calling up advisors asking for strategies. You come across those through accountants, and those are hard deals to find because everyone's whale chasing. You know, same thing in real estate. Everyone's trying to go after the big listings. A lot of advisors are everyone wants to sell those big policies, big commissions. And I don't like dealing with people with that much money. It's too hard. It's too complicated.
So when you're talking to someone right now, what do you think is a good investment mix for someone? I understand everyone's unique. I understand that's such a difficult question, but if you were to just, I guess we can't even do it. Everyone's so unique with such different goals. It's like just impossible.
5 years ago, I would have had a different answer than I do today.
Yeah, it's always changing.
Totally.
So what is it for you right now? Like, what are you for you? What can you share about yourself? Like, you like real estate, a little bit of Bitcoin, it sounds like, some insurance.
Yeah. No. No. Like, I have my term insurance. I'm done with insurance. I'm not touching what I have for 20 years. That's it.
So you sell only term insurance right now?
I sell all of it. I do sell some permanent policies, but I don't do any of the complicated strategies. I focus on, I provide financial advice, and then rather than getting remunerated in fee for service or managing people's money, they buy an insurance policy, and that effectively...
You know what would be great? Like, and I know we've tried to do this, and I think Nick tried to set it up, not me. This was like his thing. If we ever could get somebody on to just like go back and forth with you on their beliefs to insurance and your beliefs.
The problem is you're missing context. So I've spoken to a few people who disagree with me. And what I'm realizing is we're just talking about generalities. My issue is the specifics. So of course it can do all this stuff, but the question is, should Jim do it? So what I want to do is show me your 5 most recent big sales. Show me their situation, and I'm telling you, I'm willing to bet that all 5 of them, I'd be able to convince them to do the complete different thing. I'd be able to, I'm willing to bet that the 5 people that you did this with recently and made a $10,000 to $30,000 check on, I'm willing to bet that none of them should be buying this. None of them. But you convince them that it's a good thing to do because they've paid dividends forever, or in 30, 40 years, this is the credit to your capital dividend account, or this is what your heirs will see. And I look at what's happening with the monetary system. I look at what's happening with people's investments. I'm just like, fuck, we're talking about a 40-year-old's estate at the age of 90. And I'm like, 50 years? I don't know what's going to happen in 2 years, let alone 50 years. And I'm thinking to myself, shit, if I'm still around in 50 years, imagine what the index will be if we keep this debasement and printing. Imagine what Bitcoin will be if we keep this debasement and printing. And I can just take my Bitcoin and put it on a Trezor wallet and just go somewhere. It's hard for me to believe in anything but long-term assets. It's just really hard for me.
Agreed.
I was sitting with, when I moved brokerages, it was nice every few months, the guy who runs a brokerage would invite me to a lunch with, a representative of the insurance companies, which is great because,
they're
free keg.
They're not paying for your lunch.
Free keg.
They're not paying for your lunch, man.
No, they are. And so I met a new wholesaler, and depending on the feel that I get from him, I don't know if you feel this. I don't know how much of myself I should be sometimes
Totally,
with people,
yes. I like to think I'm a pretty open book, but you're right.
I am.
There's always that little bit more that you're like, I share it all.
Yeah, exactly. And I got the warm and fuzzies from this guy, right? Just a really good dude, a young guy, one of the big insurance companies.
How did you ruin it?
I didn't ruin it.
Okay, good. I'm happy.
He actually has really helped me.
Okay.
With a bunch of situations. And we were talking about, we dove right into this like fortune of fiction participating life insurance stuff. And he was saying how he goes to events with advisors that are pitching these concepts and par. And he says he sits in the crowd and he's like, fuck, these guys don't know what they're selling. They don't get it. Some big time advisors, they do not understand what they're selling. And I said to him, that's your fucking fault. It's your fault. And he's like, what do you mean? I'm like, the dividend scale interest rate. Mm-hmm. I'm like, is that a percentage? And he's like, well, no, it's not a percentage. I'm like, okay, that's all that it is.
Explain that.
When you buy these policies, I think this is the most important point with participating life insurance in general. When you buy these policies, they'll tell you that the return is a dividend scale interest rate, a DSIR. Right now, the dividend scale interest rate is around 6.5%. Now, a lot of presentations that are given to advisors and individuals, they'll show you a chart, and it'll say the S&P TSX, GICs, Consumer Price Index, dividend scale interest rate. The problem is that if I put $1,000 into the S&P and it does 10%, I'm making $10. So does that mean if I have $1,000 in this par insurance policy and your dividend scale interest rate is 6.5%, do I get $60? You don't. It's not a percentage.
It's a hypothetical.
It's a scale, but it's not a percentage. But you can't call it a scale without a percentage. Because if you called it a scale without a percentage, people wouldn't buy it. Because then people would be like, well, hold on a second. What does scale 6 mean? They'd be like, well, it's an accuracy of predictions. And they'd be like, okay, so what are the predictions? They're like, well, I can't really tell you what the predictions are. Then people will be like, well, hold on a second. If it's not a rate of return and it's based on predictions, can you just show me another investment to buy? I want something that makes more sense to me. They attach this is what I believe. They attach a percentage to it because that's the way it allows people to relate it.
Kind of compares apples to apples, but if you explain it as a scale, then all of a sudden you have it on a chart with all these other returns. You're now apples to oranges. Like you're putting two things that are not the same on the same chart.
Exactly.
So and people logically conclude for themselves it's the same. And what people conclude for themselves is the most powerful way to persuade people. Mm-hmm. So that chart, which I've been presented myself.
Of course, you've seen it.
Yeah, it just...
And like it's not a percentage. It's just not. So stop calling it a fucking percentage. Like it's just that simple. I mentioned this to the regulator I spoke with. It kind of went over her head, but it's simple. It's not a percentage. I have participating insurance policies, life insurance policies on my kids. I bought them before I went down this path. I would probably go about it a little differently now, but listen, it's sunken cost fallacy. I think like I'm so deep in that just run it out. And it's still life insurance for them. It is what it is. I do believe that there's going to be value in the short term. When they're 20, I'll take out a line of credit on it. Like it's not a big part of my net worth, so it's totally fine. But I got my daughter's most recent annual statement, and it's cool because it says, here's a dividend scale and here's your dividend. And it said like $1,400. I'm like, of what? Like usually when you get a mutual funds return statement, like you have the holdings. You can understand how they went up or down in price.
So
and
you don't
see
the holdings. There, so you don't
right? No, I can see the holdings, right? But I don't have units of this fund.
Yeah. That's
right. How many units do I have? Like a distribution based on what? The point is it's baked into the cake. Like they know exactly what it's going to return, assuming these predictions are accurate for now until the rest of your life. So things have to change pretty drastically for that to be off. Now, if that's off a little bit over the short term, imagine how bad it's going to look over the long run.
Yeah.
Or maybe, and the problem is it can't get significantly better. Like they're giving you kind of the best case scenario.
So that's set in stone at the beginning? Like you're in this tranche of investments, it's all set, or can that be adjusted through the life of the policy?
See, the other problem is the more I dive into this stuff, the more I realize like how little I do know.
So it is like a black box.
It is.
Like
Well, that's what this gentleman from Manulife said. It's a black box. You don't know what you're going to get. It's a trust me product. This individual.
Because next year on the statement, it might be a different dollar amount. And because you don't know the units of what you're holding, you really just don't know.
Yeah. And that's
it's like you're at their grace. Like here
100%.
is, we've allocated you this much.
And it's regulated. I understand it's traditional. It's a good, listen, I'm not saying it's a total, listen, it's a scam in the sense that I believe people are overpromised.
Yeah.
And people are being compelled to put way more much into this than I believe that they should. Like way more than they should. But it's not like they're not stealing from you. You know, if you die, like the family gets the money, you can still leverage it. Like there's all these cool things that you can do with it that gloss over what I believe is the bullshit. And I just have a lot of resentment for the bullshit. Like when you ask them about what are the assumptions, what are the predictions, and they're like, oh, it's proprietary. No one across the market shares it. I'm just like, I can't in my right mind sell it. Now, if you want to buy it for a kid and it's a long-term, just as life insurance policy, it's a different story.
Yeah,
like I get
you
that.
start to understand it at that level.
But when you're using it for strategy.
I think that's why it took so long for Nick and I to sign on to ours. Like I just couldn't make sense of it. And then I thought I was the problem. And I remember after 5 or 6 meetings, I think my big point was like after inflation adjusted, I don't even understand what these dollars are worth. I don't understand how it goes against everything I believe in with information advantage. I just don't get it. But I've been told for so many years that like when you get to a certain financial state that this is something you should have.
Yeah, well, everyone says that.
Yeah, and I caved. I was just like, okay, fine. Like I'm buying this.
You know why it's that way?
No.
Well, people whose parents or grandparents bought these sorts of policies confuse getting a check from the death benefit with the product working. So no matter what, people have a good experience with it. Yeah. And I pay out a lot of claims.
It is a forced thing that you're contributing to every year for X number of years.
Yeah, but no one asks about, like when I give someone a death benefit check, they're never like, Adam, do you mind pulling up that illustration from 1987, letting me know what my dad, remember my dad telling me this would be worth X? That never that doesn't happen. So people,
it's kind of the way I think about real estate a lot, because I'm like, if people just realize like the reason the real estate's good as like a rental property and stuff, it forces you, like you buy this thing, you're on the hook with this mortgage. And yes, if the rent covers your expenses, which ideally it is, right, and leaves some cash flow, you're just consistently making these payments on this asset, and because there's leverage to it, yes, it outpaces
and you're guaranteed it,
and you're guaranteed like it works.
But by the balls.
But yeah, behind the scenes, I'm like, it's really just that you consistently contributed to this business of providing shelter. If you had this other business idea that you actually were so committed to and so consistent with, you could probably generate these returns doing a business of something else. It just happens to be that real estate is like this business in a box that has collateral that the banks lend against, and so it does work rather beautifully for what it is, but really it's nothing that special.
No, but to me, you're totally right, but it's such a cop-out. Being like, oh, because people are stupid and they can't commit to anything, let's be like, you idiot, right? Commit to this, because if you don't, we'll just take it back. Same thing with the house, right? Buy this life insurance policy, you have to pay for it. If you don't, you lost your life insurance and we're taking it and canceling it and taking the cash value. Yeah. Same thing but imagine we had that much like fervor in and around buying the index. Imagine everyone was just like, you start working, VFV.to, buy it. And imagine, but no one's making 100% of your deposits in the first year when you buy the index. That's the issue. Like the reason why these products are so popular is because of the commissions. If it wasn't for the commissions, it wouldn't be that popular.
Wow.
Now that's what I believe, right? And it's hard for me to think otherwise because I just haven't interacted with anyone where I'm like,
one day we'll have somebody on here countering with you and we'll just sit in between it. Nick's going to host. Nick is dying to host that. That's like his dream is to host it. Him being the moderator with you and someone else going back and forth on this subject, and not really to attack each other, just to like talk it out. Like,
totally. I'm going to say I'm damaged goods. I am damaged goods when it comes to this stuff.
Tell me other stuff that you're up to, because I feel like an entrepreneur, the way you behave. What's going on with just everything that you're doing? Yeah.
So it's a health spending account platform that we built that provides direct-to-consumer benefits plans. Simple as that.
And
we're not reinventing the wheel. I just created my own product.
And the reason you created that is just to go better on fees that you didn't like to see, or...
this is a whole nother rabbit
Because we
hole.
do get asked by a lot of small, medium-sized businesses, hey, like, how are you doing your health benefits? So you can just describe what this is doing, first of all, and then maybe why you started it. So what is this?
So benefits are a tax play. So when you have employees and you pay employees source deductions, CPP, EI, and it's included in their income for tax purposes. However, when you're reimbursing an employee for an eligible medical expense, so take all those medical expenses on the medical expense tax credit list. When you're reimbursing an employee for an eligible medical expense through a third party insurer, it's tax deductible and tax free to the employee. That's all benefits are. So most small businesses or companies use insurance companies for this administrative service. So when you're a business of 10 to 100 people, you contract with a Manulife or Sun Life or whoever it is, and they charge you, let's call it 10 people, $1,000 a month or $100 per employee. And as part of that, they do two things. The first thing they do is provide actual insurance, life insurance, disability insurance, travel insurance,
Sure,
hospital insurance, the stuff that you actually need to insure for. But most people really only want these products because they need to go to the dentist or
totally get a massage,
stuff like that. The problem is, and the insurance company administers this tax strategy. You write off the premiums to Sun Life, and they direct deposit the reimbursements into your checking account tax free. That's written off. You don't pay tax on that amount. Actually, in Quebec and provincially, you have to pay tax on it. But in every other province, it's fully tax free. The problem is, though, if you have 10 employees and you're spending $1,000 a month, the insurance company is giving your employees a contract that allows them to spend a lot more than that $1,000 a month. So a lot of contracts that I see, think of paramedical practitioners as a big one. There's a list of 12 of them, $500 a year each. That's $6,000 a year. Then there's dental, another $1,500 a year. That's $7,500. Imagine a family of 4. That's like $30,000. Meanwhile, that single premium's only $150, $200 a month. That family premium's $400 or $500 a month. So you're giving the insurance company, pennies, but they're letting your employees spend dollars only because it's in the contract. So what happens at the end of the year? Your premiums go up 10 or 15 or 20%. So what do? You go to another insurance company or you find another advisor who's going to promise.
And your premiums have gone up because people have spent more than the monthly payments we're paying for.
Exactly.
So the insurance companies come back and say, oh my gosh, look how much they spent.
Exactly. So now we increase your premiums accordingly. Now you go to another insurance company to get a discount, but you're not fixing the problem. So what a lot of companies are doing, they're moving to health spending accounts. The idea is that you remove all those benefits from that plan and you say to everyone, hey, I'm just going to give everyone $2,000 a year. Go spend on it on what you want. Sometimes you can carry it forward. Sometimes it's use it or lose it. And you can spend on any medical expense and you're capped. So at least you know that if you have 10 employees and you're going to give them $2,000 a year each, you can't exceed $20,000 a year. For a small,
medium business, it's really nice.
It's a no-brainer.
Yeah, it really works well.
The irony is that a lot of the clients I speak with and the leads that I get, what I present the concept, I'm not even plugging Kibono because I can sell HSAs through all the insurance companies. Okay. I created my own because I'd rather sell my own product, and I built it from both an employee and employer perspective. But a lot of times when I present the concept and they go to move the policy to me, their existing advisors always like, oh well, why don't we set you up with a health spending account? And I'm like, fuck, where was that 3 or 4 or 5 years ago? And the reality is the insurance companies, they can't just make, between the broker and them, a 25% cut on the same amount of money every year because they need to make more money. So the only way to make more money is to drive up the premium. So they drive up the premium to continually make
a sneaky little way to drive that premium up.
Totally. Listen, the reality is this. My industry in this context shouldn't exist. If the Canadian government just made all medical expenses tax deductible, this shit wouldn't exist. None of it. And insurance companies wouldn't just provide insurance. Like why do you need Sun Life to be in the middle of your cleaning bill that costs $200?
You're going to go into politics one day?
No.
What's the website for Kibono?
Kibono.ca.
Spell it out.
Kibono.ca.
We'll link to it in the show notes as well.
So the word comes from the Latin saying qui bono, which translates to who benefits.
Yeah, I forgot about that. Yeah, you told us that.
If every part about the company isn't even the company, it's the name.
Yeah. We have had a couple people go by. I can't remember what you had on your booth or whatever you had, and we kind of got some comments on some of that stuff. Did Nick tell you?
No.
Yeah, we did.
Like good comments?
Yeah.
Because I remember
some good, some interesting.
I remember I crossed out the flawed and put scam.
I think that's
right?
that's what
did it.
Yes.
Because like, I don't know, you read some stuff online about like selling. They're like, come out with the most provocative thing you could possibly say.
It worked.
Right?
It got
so I'm
the
like,
attention.
Oh, scam.
Yeah.
Right. And people like, you think they're robbing people? I'm like, no, I use that to like gain attention. Yeah. What I mean in scam is that like what they deliver doesn't make sense in the context of what they're just overselling you.
Listen, the way you're so well thought out about it, if someone else is going to go there and put scam at one of our events in the lobby at this stuff, we'd be like, holy shit, what are you doing? But because you have it thought out and you're explaining what you mean when you say that, it's perfectly fine.
People are like,
people are not going to like it when I say that. Yeah.
Isn't real estate a scam? Listen, you gotta, when I'm starting to learn about money and investing, you just got to pick your poison.
Yeah.
Like you really I don't know.
Do your due diligence, go deep, get the information advantage, surround yourself by people you trust. Usually,
which is hard,
Which is hard. And usually you're only going to figure out 80% of the stuff until you have to take a leap.
Right.
None of us 100%. Are going to get to 100% knowledge. You just, every time you think you're getting close to like, I really understand that subject matter, some curveball comes your way and you get sideswiped on something.
100%.
But if you surround yourself by the right professionals, insurance, real estate, mortgage, legal, paralegal, contractors, and you have people you can trust, and sometimes people go bad on you. Someone you can trust for a little while and you can't trust them after a little while. But it's your life will be better off by creating a team of people that you can call. I just had somebody call me just today on a pretty serious situation in their life. And it was really just the contacts that I've had over years that gave them some hope that they could get the information they needed pretty quickly just because of the people I know. Right. It's like the network. It's like, that's valuable. Being able to call up Adam and yell at him for a little bit is super valuable. Yeah. So I appreciate that I can do that. No, I can call you a friend. So thank you, man. Thank you for doing this. Kibono. And then for someone to reach out to you for insurance,
go to the website, Fortune or Fiction.
Fortuneorfiction.ca.
Yeah.
Okay.
If you just download the book, I'll get a push notification. And Niman.financial@gmail.com or adam@kibono.ca.